And if the U.S. government wanted to buy gold to devalue the dollar, to increase their asset to liability basis, and to push gold higher over time, especially with the Genius Act, where money will be backed by short-term treasuries, Tether, the biggest benefactor, which isn't transferable, that interest. You keep buying gold like this, let gold move up, even though it's synthetic, it's organic in its movement through the money movement. You devalue the dollar, you sell that gold to the treasury, which strengthens their balance sheet. You say to Tether, you're free and clear. We're going to pay you over time. You're going to sell this to the treasury. You're going to walk away perfect, right? We're not going to investigate you, but you're holding our treasuries. You're going to buy gold for us to strengthen our balance sheet. This is the same thing is true with all the gold being delivered to COMEX. People say, but why isn't it leaving? It doesn't have to leave if it's the Exchange Stabilization Fund.
You know, gold has been going down all year, kind of bottomed out here. We weren't sure if it did or not, but now there's a decisive move to the upside.
Yep. Keep that there for a moment. By the way, if you were to, on both of them, if you were to draw a line from the top peak in the middle and underneath it parallel, what you see there is a falling wedge pattern.
Right.
And that's very bullish if it breaks out. As you can see right there, it has broken out of that wedge program, or that falling wedge pattern. And that is very, very bullish in terms of technical patterns. And you'll see the same thing with silver, I believe, that they have indeed. So there's the falling wedge from the top peak down and a straight line underneath the thing. And then it's breaking out of that falling wedge, which is a bullish technical pattern.
Okay, so Andy, you've seen a lot of these patterns around the course of your career. How much faith do you put in this, that this is a sustainable breakout, a trend change from the deflation in price we've seen all year so far?
I think technical is important and has a role to play. In a market that is manipulated, it has less relevance long term, I would argue. Now, there are those technical analysts that would disagree with me, but I think any market that is messed with the way the gold market has been, technical analysis is less reliable. But I think things are happening right now, in particular the exchanges that we see in Dubai and Singapore and really in Hong Kong, that will change price discovery. In Singapore and in Dubai, we see same-day settlement contracts now instead of futures contracts, same day, pay and get, but in dollars. In Hong Kong, however, same-day settlement in yuan. Now, there is something called exchange for physical, where you can take a COMEX contract, exchange for physical to BRICS Hong Kong. Well, guess what's in Hong Kong now? A facility that is an exchange that is settling, challenging London and the United States in another currency same day. These countries are all searching for price discovery. And if we get to talk about the BRICS at all today, I'll show you that in other areas. But they're searching for price discovery. A couple of weeks ago, they made it illegal, but not illegal. They closed the ability for all of the people who live in the country, unless they have legitimate reasons to hedge, they can no longer buy futures exposure through the 3 or 4 largest banks in China. And they said, no, you got to close that out. But hey, we want you to accumulate metal at the margin. Go ahead and buy it right now. We want state-sponsored accumulation programs, buy physical, price discovery. And if you're dumb enough to continue to suppress the price in the West, and you can exchange for physical a contract to Hong Kong where there is massive arbitrage opportunity in real price settlement, you're dumb as a mud wall. And what you are going to begin to see, I believe, is price discovery that will slowly happen to where naked shorting contracts in the West is a game that will be an existential threat at some point as real price discovery moves eastward. And that is what we are seeing, in my opinion.
Okay, I'm going to try sharing my screen one last time here, just to pull up a recent headline. This one's from Reuters. China's gold reserves rise by most since October 2023 as buying pace quickens. So, Andy, you have been saying for much of the past year that China has just been buying record, at least importing record amounts of gold. Obviously, this headline, which was just from the other day, very validative of that, and it shows that they haven't stopped even though the price of gold has been going down. And to your point, that's probably why they're at record.
That is why
back
they're
to record highs, is because they're saying, okay, this thing's on sale, let me get it, right?
Well, not only that, Goldman Sachs said you're lying about the amount that you're buying. You're buying at least 4.5 to 5 times more than you're saying, and they use the export numbers. Same thing is true here. The central banks bought more gold than they ever have, ever, in the first quarter, ever. They said they bought 16 tons, but the World Gold Council said, nah, you're lying. You bought 15 times that, 244 tons. We see the export numbers. So the central banks, which, by the way, it's voluntary, right? They don't have to tell the IMF and the World Gold Council what they're buying, but they do. They believe they bought 244 tons as the price got kneecapped. And then you look at the second quarter, those numbers are at 62 tons, I believe, here in the second quarter, or year over year. They're now up to, I think, let me just not think, 289 tons, the biggest quarterly addition since Q4 2024. So quarter over quarter, their gold purchases are up 231 tons or 407%. Now, when I say 231 tons, let's just break that down, because there's 32,150 ounces times 231, 7,426,650 ounces, let's call it, times 4,400, 32,677,000,000 that they reported, right?
Yeah.
Their numbers are not right. They continue. Year to date, they've bought 345 tons of gold. So let's do that math real quick. 345 times 32.1, times 32,150, 11,091,000 ounces times 4,400. That's $48 billion worth of gold that we know of that they've bought so far, as the price was getting destroyed. Same thing is true with Tether. They added another 14 tons of gold in the second quarter. They have 19 billion in gold. This is a crypto company buying gold. The people who, and I believe, I don't care, I will believe forever until I'm proven wrong, that they are acting as proxy for the US government. They were in trouble. They're not in trouble. Bo Hines, as Trump's cryptos are through last August, he's now the CEO of USA Tether. And Tether opened up the back end to the Justice Department, identifying 4 wallets held by the IRGC. And they allowed the Justice Department to freeze them at the smart contract level. In other words, they are cooperating with the U.S. government. And if the U.S. government wanted to buy gold, to devalue the dollar, to increase their asset to liability basis, and to push gold higher over time, especially with the Genius Act, where money will be backed by short-term treasuries, Tether, the biggest benefactor, which isn't transferable, that interest. You keep buying gold like this, let gold move up, even though it's synthetic, it's organic in its movement through the money movement. You devalue the dollar, you sell that gold to the treasury, which strengthens their balance sheet. You say to Tether, you're free and clear. We're going to pay you over time. You're going to sell this to the treasury. You're going to walk away perfect, right? We're not going to investigate you, but you're holding our treasuries. You're going to buy gold for us to strengthen our balance sheet. This is the same thing is true with all the gold being delivered to COMEX. People say, but why isn't it leaving? It doesn't have to leave if it's the Exchange Stabilization Fund. The biggest money in the world. All that matters, the price is, I laugh through this entire thing. I say, people say, you're talking your book. What do you know? No one listens to you. Well, the thing is this. If when the price is getting eviscerated, the most well-informed traders in the world are doubling and tripling down and lying about it, what more do you need to know? You're all being misdirected by price. That's the truth. They can easily misdirect. And even the BIS, the most important bank in the world, told us this. They said that fall in January was synthetic. It was structural. It was orchestrated by the CME group by raising margins 300% into the first week of January, where the ETFs have to rebalance to get in line with their prospectus. It was orchestrated, but it sure did a hell of a job. It wiped out all the open interest. And the interesting thing about it is that the public sold the whole way up, those that were selling. And who's been buying the whole way down? The central banks, the people who are more informed than anybody. They have analysts and information none of us will ever see. And they're the ones that are doubling and tripling and quadrupling down quietly while everyone jams into a window of 12 stocks. Highest participation by the public, largest amount of option exposure, highest level of margin debt into a handful of stocks as the smart money is gobbling up gold and silver that everyone is left for dead. That's the truth. That's why I didn't fret over all of this. And saying that, it's hard for people to believe it because I own a gold company. But at this point in my life, after 36 years of doing this, it's the last thing I would do would go on show like yours and say anything that I didn't believe. All that will do is come back and make your life miserable. And that's the truth.
All right. Well, thank you on that, brother. So, all right, totally get the point you're making, which is that the deepest pockets with the greatest amount of inside information are big time buyers right now, even while retail has felt burned and has been selling all the way down all year. So obviously, be like Mike, right? The old Michael Jordan saying, like, be like the big guys, be buying here, not selling.
But that is how misdirection works. You misdirect through price and rhetoric, and then you are free to load up when no one's looking.
Yeah. So help me understand. I got a couple questions for you. Help me understand one thing that you said there about Tether. So if the government is relying on Tether to buy gold, I get in general your thesis, but how are you expecting that eventually the gold that Tether is buying is going to eventually be owned by the U.S. government?
Well, that would be my guess. Yes, that they will slowly offload it to the Treasury Department. Yes.
Okay. And does that mean the Treasury Department's going to buy it from Tether,
yeah,
or do they strike some sort of deal? We'll save you, but in the long term, you got to transfer this stuff to us.
Yeah, and we'll pay you. You'll make gazillions of dollars. Go for it. We would like you, with the interest that is not transferable, all these treasuries, buy gold, which devalues the dollar. It's the only neutral barometer. It's the only asset that you can measure everything against. So if the dollar is falling in regards to gold, that is devaluing the dollar. That's what Roosevelt did in 33. Not, this is purely a guess, but it makes a lot of sense that you got Bo Hines, who was Trump's crypto czar. You have the fact that they are the primary benefactor of the Genius Act. We want higher gold to devalue the dollar, to be able to reindustrialize this country and sell manufacturing. Triffin's dilemma says you can't do it if you're the reserve currency. So we will slowly default on the reserve status, let the dollar collapse slowly. It still will have the rails of commerce, but if you save in it, you're dead. And so if we need to accumulate gold, if the Treasury Department was in the open market doing it, everyone would rush to get it. But if the Treasury market sits quiet and lets a proxy entity do it for them on behalf of the Treasury and slowly siphon it to the Treasury Department, yeah, to me, it makes perfect sense. They win, they get money, they're in good graces of the government. The Treasury Department wins, they get the gold, and they don't have to worry about competing with everyone running to get it because the U.S. government's buying billions of dollars every month.
Okay, so I get it. Right now it's conjecture, it's a hypothesis.
100% conjecture. I totally am just guessing.
Sense, and the flows are happening at least. Let me ask you this. I don't know if you know the answer, but so Tether is buying tons of gold, right?
Yes.
Do we know where they're storing it?
Yeah, I believe it's being stored in Zurich in vaults in Switzerland.
Okay, so that actually surprised me. Why wouldn't it be stored in U.S. vaults if the U.S. was trying to get Tether to buy gold?
Because if they made it maybe some of it is. I don't know where all of it is being stored. I don't know. But even still, there are flows going in and out of Switzerland all the time. I think if you wanted to do it and keep at arm's length, you would do whatever you needed to do to make sure that you don't have analysts saying, hey, that's the U.S. government for sure doing it. I'm just trying to think outside the box. If they wanted to accumulate the metal before it became so obvious that they were doing it, you'd see the whole world rush to buy it, and that would crowd them out of their intention of getting more. I don't know. I don't know. I don't know if it is, and maybe some of it is in JP Morgan vaults here in the States. I don't know.
Okay. Let me ask you this too, and this is not a slam against Bitcoin or crypto, but Tether is a really good example of crypto. And I know stable coins are a little bit different, but it's an example of crypto saying, hey, we're going to take some of the profits that we make as an organization, we're going to store it in an asset that we feel good about. So we're going to buy gold with it. I don't know of many or any examples in the crypto world in the gold world, where gold companies are saying, you know what, we're going to put part of our treasury in Bitcoin. I just might be ignorant of that. I don't know. Do you know? Like, is this
No, I
working the other
don't.
direction?
There's no one to my knowledge, but you could take it even a step further and say the central banks, the entities that print money, are buying the one thing they can't print. They're buying gold. So I think it's really the fact that what goes around, well, no, that's history doesn't repeat, it rhymes. And so when you talk about gold, it just, no matter how hard people try to push it out of the ecosystem, it just keeps coming back to it is the one asset that man has agreed upon for 6,000 years to be money. And gold and silver mentioned over 700 times in the Bible. No matter how much you try and denigrate it, it keeps coming back to the one neutral reserve asset. And in a world where currencies are, you look at what's happening between Japan and the United States, it shows the fragility of the entire system. And this isn't what you asked me, but it's to the point. And that is, everyone says, well, the US has the most liquid bond market and these rails are so great. Really, are they? Are they? So, it's being framed as we're helping Japan and helping them stabilize their currency. The hell that it is. We don't want them to sell treasuries, which 50 billion will start to blow up our market. So is it so liquid that when the largest holder of treasuries wants to do the one logical thing they should do, and that is to sell treasuries that they have over $1 trillion and to buy dollars to support the yen, to buy yen? No, don't do that, they say. Don't do that. You will pledge them as collateral, give you a loan. Mm-hmm. In other words, selling creates price discovery. Is it really the most liquid rails if selling crater our system and the whole global system? The point of it is that everything is it's a facade, right? It's a facade. And I think that the world is beginning to understand that. The big money says, I don't want to hold those. Not only if we piss them off, will they lock us out and confiscate them, or if we join the wrong side. Look at Saudi Arabia. Saudi Arabia is straddling the line. They're M-Bridge participants. They were just at the health meeting for the BRICS, 11 countries. They were one of them. They're going to be at the BRICS meeting in India in September. They're straddling the line, as is India. You don't want to piss them off, but even still, if you're a large holder and you want to sell, no, you'll sell on our terms. So everyone talks about the liquidity of the U.S. system. I think the whole world is seeing the whole system is fragile. And this is why you're seeing entities like central banks, including people who are smart or entities that are smart and in the know, see this for what it is. And that is that no matter how hard you try to push gold out of the picture, it keeps coming back in because it has trust. It is an asset with no counterparty liability. And people are beginning to see that even the most liquid thing in the world, the U.S. Treasury, has a whole bunch of liability and issues that no one talks about, like this. Those that say it's so liquid. No, really, it ain't. If you can't sell 50 billion without freaking out the U.S. government. So I think there's a lot more to it than meets the eye.